Netflix out with first quarter numbers just moments ago. You can see it there, down a little more than 2.5%. Smashed subscriber estimates, though, a little light on revenue guidance. The company also says it's going to stop reporting quarterly subscriber numbers next year. Joining us now is Deepwater Asset Management managing partner Gene Munster and Third Bridge analyst Jamie Lumley. Welcome, guys. Gene, what does this change in sub-reporting mean?
It's an indication that the company recognizes that they've been through an impressive tailwind over the past 12 months. They've had, of course, the password, what's happened with the ads, also a price increase in November. So 2023 was packed with good news, good tailwinds. We're seeing that in the results now. They're thinking forward to next year, and I think understanding that they don't want to be held accountable to that metric. And I think that that is always a tell for investors in terms of when the pressure point on a stock, that metric is going to be less visibility. I think it is an indication that this is the scope, the trajectory of the story is going to change from these tailwinds to what are difficult comps and less visibility. So I put this clearly in the camp of looking forward, more of a negative than a positive.
Okay, so Jamie, what are the numbers that are going to matter more, relatively speaking, to investors now that they're not going to have that number, eventually to look at?
Well, certainly the subscriber numbers are the first metric that a lot of analysts have been looking at as one of the key areas where you can compare where these various streaming businesses and also understand the scale that Netflix has built. Going forward, there is, of course, the operating income and profitability, which are incredibly important and are, in addition to subscriber numbers, an area where Netflix is particularly differentiated. If we look at that margin over this past quarter, well above 20%, having them raise their operating guidance for this year, if we think about where the rest of the competitive landscape is, Disney is targeting long-term just double-digit operating margins in their streaming business, and Netflix is already well over that. So looking at that area, I think that's something they'll definitely want to focus on as they work on scaling their ad business, increasing revenue per user there. That's something they'll definitely be focusing on.
But the valuation of the stock itself, is it still compelling at these levels? Jamie?
I don't think so. I don't even think it's...
From my perspective,
it's not.
Where Netflix is today, they've come off an incredible past couple of months. Just looking at the idea of these comparable periods, Netflix has built a ton of momentum, and coming into this quarterly earnings report, the big question would be, are they going to be able to live up to some incredibly high expectations? And if we think about one way from here, there's still the ongoing crackdown on password sharing. There could be room left to run there. Netflix initially targeted 100 million households, which were sharing passwords. Even if we look at the numbers they've had today, there could still be a substantial opportunity to continue to scale. So if we think towards the future, if they do stop reporting those metrics, we could still be seeing the benefits of those growth numbers translating to both top-line growth and ongoing expansion to the bottom line.
Along those lines, Gene, they do mention in this letter, quote, today our share of TV viewing is less than 10% in every country, so we have plenty of room to add value for our members and grow our share of viewing by broadening our slate, including live events, comedy, sports, competition shows, music. This has been a thing investors have been focused on as they have started to dip their toe into the sporting event world. How meaningful is that lever for them to pull?
Well, if it's kind of these one-off sporting events or kind of eclectic sporting events like wrestling, things like that, I don't think that that's going to, NASCAR, I don't think that that's going to move the needle. For them to really have growth drivers that can complement, that can add to what the drivers that they've had over the past year, for them to add to that, they got to get into some mainstream sports, and that's going to be an impact on margins. They talked about margins going down. They're typically conservative, so you need to take that into factor. But, Morgan, I think that you have to look at this in the context of these growth drivers are going to come at a cost. And I think this is it's a solid business. It's not a business that should trade at, after the downward revisions tomorrow, at 40 times earnings.
Jamie, I know it's a bit early for this, but journey with me, if you will, into the broader media industry now. What's the impact on everybody else who's been trying to chase Netflix using subscriber numbers sort of as a proxy and been losing money doing it? What's the impact on them of Netflix eventually not reporting those sub numbers anymore, and maybe analysts focusing more on not just revenue but also profitability? So even if they do start to make real sub gains, how much does it help?
Well, it's a bit of a double-edged sword here because we think in terms of advantages. If you think about the Paramount Pluses, the Disney Pluses of the world, they're no longer on a quarterly basis have to compare their scale and or lack thereof in comparison with Netflix. But then there's also the point if they do start to just focus on those underlying fundamental operating numbers, most of these companies still trail Netflix by a significant portion. So the focus across the industry is just on what that operating income is, just on where that revenue growth is going. Many of these businesses continue to lose substantial money per quarter. Disney is trying to break even this year. Paramount is very far away from this. Warner Brothers Discovery, depending on how much you read into the way they report their streaming business, is or is not quite to break even at this point. So by focusing on those numbers, it might continue to really bring into contrast the differences between these businesses and how Netflix is still ahead if it's not highlighting its scale.